mindful of these areas for sure as a bare minimum. And we want to build these into our thoughts. We want to build these storylines into our matrix, into our thoughts, into our processes, because we know that these are going to have informed decisions. Informed decisions, yeah? So when we know that these are informed decisions and we want to try and do something with these informed decisions, then of course it's incredibly important that we come up with something in terms of those informed decisions, right? So we can obviously recognize the levels. We can recognize the narratives. So this is obviously the night time of the third, which means that these levels are valid for the fourth. So if these levels are valid for the fourth, 16,925 obviously is the very top tick price up here. It's a very, very top tick. So we can see that that's 16,925 price level approximately there. And that's obviously a very, very big dealer key price. Now, that price doesn't go away. It actually remains on the charts. It might lose some of its relative value because obviously dealers can do a lot of things if price moves away from that. And a lot of positions may well be squared away as the price moves away. And therefore, the power of the level stops being massive. But it doesn't take away the fact that it's still a level of interest. On the downside, we can recognize we really have a zone, an area of interest, and it's 16,700 to 16,690. So 16,700 is right there. 16,700 to 16,690 is the big zone area. And I'll just draw it in as a little bracket there. So approximately there, right? It doesn't have to be exact because it's not an exact science. On the 5th of January, we can see that we start seeing some new levels, but we don't have any triple M levels. Triple M levels, of course, are the major price levels that have a massive impact on equities, a massive impact. And as we lose the M's, as we start to lose the M's, we start to lose the impact. It's pretty simple stuff, really. Not that technologically advanced, but simple stuff nonetheless. So we see 16,408, of course, and we say, well, 408, 410 doesn't make any difference. It's just the area. So we come into 16,408, approximately that price there for that day is a double M level. We can see 16,520 is a single M. So 16,520 is a single M price level. So we can mark it on the screens. And you can see we start forming the matrix. We start to form elements of volume because these are all volume nodes. 16,820, they're all volume nodes, irrelevant to price at this stage, totally irrelevant. You can see we're not looking at anything to do with price or volume in and around these areas. We're not making any decisions that that's a sell and that's a buy, or that's a buy and this could be a sell. This could be a sell or a buy. This could be a sell or a buy. So it's pretty straightforward to understand this as a process, right? So when we get the 3 M's and then we get the 2 M's, and we start recognizing the 2M areas, and we start recognizing the 3M areas, and we recognize the 1M areas, these are the first things that must go on our charts. All the other ones are important, don't get me wrong, because they can build importance during the course of that day. A level may build in its significance because a lot of business is trading at that price, resulting in a lot of hedge option activity. On to the 8th. 16,820, 16,820. So you can see that this is this volume coming in here at 820s. So now we're starting to see that this is building and this is getting more significant at 820. We've gone from a single to a double line, if you like, if you're using that type of convention, just as an idea. 16,405, of course, as a 3M level. So obviously the liquidity at 400 to start with, you're now looking at this as a 3M level. So you're building out your 3 lines to signify the massive significance of that price point. And then, of course, from yesterday coming into today, 16,800. So this level drops down again and it becomes 16,800. So you can see it's went from one level of significance to two levels of significance to three levels of significance. Yeah, you see that? And this has went from 2 to 3 as well. Very interesting stuff, I hear you say. Damn tootin' right it is. So then we go into the other level. Today we've got a single M at 16,650. And remember that single level, if price has any intention, may develop over the course of the next while. And then we've got the double M at 390. So obviously this is this price just dropping out of bed a little bit, losing a little bit of significance, but still very significant. Do you agree? So there we have it. There we have our roadmap. And to keep the convention the same, I'll get rid of that shaded area and we'll just put it in as a line at 16,700 so you can understand the same developing storyline. So we're going at 16,700 here for a 2M level at that point there. Now, one would imagine that on each of these days that there are going to be big volume ideas developing at certain times each day. So we now get this concept of the matrix. The most significant trade ideas would obviously be to go from 3 to 2 and from 2 to 3 and from 3 to 2 and 2 to 3. So when we look at these as ideas, we would recognize perhaps that price might do something like this. Now, we might be nowhere near this idea, right? We might be nowhere near this as a process, as an idea, mightn't we? And it doesn't matter whether you're right or whether you're wrong, but we're just talking about the possibility that this is the kind of idea that these guys are going to play, because they're going to try and defend these. Go above and we get a volatility expansion, go below and we get a volatility expansion. So we can understand that this is incredibly, and I'm talking about, we're not talking chump change, guys. We're talking about literally billions of dollars of business here. Cash open. So when we get into these trade areas, let's take a look at the chart and see how they interacted with price. So you can see that on this day, we were well below the main levels and it just kind of did very, very little. On this day, they tried to take it down and obviously they've defended it and defended it and defended it and defended it and then defended it and then got even more defensive about it. And they've taken it right back up to this one, where they've came straight back off that one, back to this one. Now you can see it's not about just saying it's a buy level or a sell level, and this is just a sell level, and this is just a sell level, and this is just a buy level. It's not about that. It's about recognizing what it is, recognizing whether the auction develops above it or below it. So when the auction originally developed above here, you're thinking this is bullish. When it then developed below here, you're thinking bearish. You were right. When the auction developed above here, you're thinking bullish. You were right. When the auction developed on a rejection here and then developed above it, you're bullish. And you were right to the tune of $10,000. Nearly $10,000, about $8,000 on the buy. And then when we get into today and we think about whether this was possibly predictable, we ask things like the 1 day, because obviously one of the biggest impactors on these levels is, of course, going to be the 1 day or 0 days to expiry options, which everybody keeps on thinking they know something about and giving in some insight. All we are doing is measuring what it is. We're not saying what it might be, but we're just measuring whether it's higher or lower than it was the day before. We talked about this in classroom. So when we see the 0 days to expiry opening lower than it was before, we're thinking that that's probably bullish. We were right. It was bullish. When it closed higher, way higher than it was before, we're thinking that that's going to press the price through the bottom edges. And we were right. It did press the price through the bottom edges. Very dangerous at that stage. Very dangerous at that stage, pressing the price through the bottom edges. When the cash market opened, and when it opened, it's marginally higher. And as far as I'm concerned, that's more likely to be a sell trade coming into that level. And it was a sell trade coming into that level. But look at the lack of volatility on the day. You see the lack of volatility? Very, very skinny day, wasn't it? Very skinny. So because of that lack of volatility, you're thinking this is becoming a buy level. So when the price tests back into here, you've got a very strong storyline to buy into this. And then when the volatility opened as low as it did that day, my goodness, you're going to be off to the moon here. And sure enough, you were off to the moon. Interestingly enough, the lack of volatility, there was a lot of volatility came in at the very end of the day here, which obviously is obviously giving you a few concerns about the sell coming in off of that key level. And the concerns were justified because the price did come off the key level. You can see at the cash open at the moment, it's a little bit higher than it was. That's okay, because we can watch to see how it develops. How fast does the zeros develop? How fast does it go volatile on the way out of this area? And we can start watching for that volatility. But at the moment, this is our current dealer's bracket. It's 16,800 to 16,650. That's our current dealer bracket, right? We've obviously got a little cheeky level in between at 16,745. You can see that, 16,745. So we acknowledge that there's a little cheeky level in this middle price area here. It's at 45. And we just acknowledge it, right? We just acknowledge that it's there, but it's a minor level. And we just pay attention to it. But at the moment, that would be the current bracket you would be focused on, is the buy off of this price, the sell off of this price. The sell below this price. And if we break, obviously, this price here, this 16,650, we're obviously looking at a small level at 575. And that's an interesting level because of that technical structure in the background here at exactly that point. So the 16,575 may hold a few clues should we reverse back down into that price level. Make sense? And it's about just the thought process that goes into this, isn't it? It's about this idea that when we start moving towards and we start rejecting away from and we start seeing auctions below or auctions above, it's like everything else. It's just another RGL. It's just another informed trader area. The same way as volume and Voltic is an informed trader storyline that we want to try and read and make sense of. If we can read and make sense of the Voltic, we can make money. If we can read and make sense of these levels, we can make a lot of money. And I'm talking a lot of money. A single contract, guys, for 8 grand yesterday. Unbelievable. Especially when you saw this volatility, 0-day volatility so low, you're thinking to yourself, this price could go to the moon with the volatility as low as that. And you can see again, it's starting to drop off again here, which suggests that this could go back up towards that 800 again today. If the volatility keeps coming out, so we want to, it won't keep coming out. It's not the way 0-day volatility works. It will always go back bid. But it's how fast does it go back bid? If it goes back bid too fast and the price slows down against it, we know that that's going to be the risk. We know that's going to be the risk, the way 0-day volatility works. Yeah. And again, this is simply this idea of knowing and understanding how things work. If we don't understand how things work, we can make trades, we can make decisions based on that information. It's as simple as that. So when we understand this, we can understand the process, we can understand the thought process that goes into this as a simple logic. But when we get it, we look at it from a gamma point of view, we look at it from a gamma narrative, for example, we look at it from a volatility narrative, because guess what? Those lines are nothing to do with anything else like rotations. They're nothing to do with rotations. They are 100% gamma and volatility stories. Do they hedge the volatility, or do they defend the volatility? Now you might be saying, but that's got to be surely that's got to be part of the auction rotations that we see on some of the smart money as well, the commercials buying and selling, etc. Yeah, absolutely, it is. But the most important feature of anything to do with options is, of course, the price of vols. And that's it. The price of vols, the price of gamma. And the gamma line, the gamma storyline for this buy trade and the sell trade was spectacular. Let me finish off by looking at the gamma storyline for these levels. And you tell me whether you thought you could have taken a decision to buy into this and sell into this using gamma. What do you think? Do you think you had enough information to buy this price level based on what the gamma was doing from the day before? Massive, right? Massive. Do you think you had enough information to sell into this 3 level here based on what the gamma was doing that night? Massive, right? Massive, right? So it's not even that difficult. It wasn't even that difficult to recognize the break back out of this area. And it wasn't even difficult to recognize the breakout of this area, having seen the sell coming off this earlier top line. It wasn't even difficult. The gamma's massively sell side. Massively divergent into the high price here. That's a 5-minute chart. So when we understand that there are a lot of easy clues for us to take out of this deal, and these are the key commercial trade levels for this particular commercial, and this commercial in this case is the option sellers, the big dealers in the world of option trading. We see that this buy trade from this price to this price and the sell trade from this price and the sell trade from this price seems to make an awful lot of sense and a lot easier to make some business here. And you can see that this is part and parcel of the stories that evolve in and around these areas. Not always, but in and around these areas. And that's all we can ever do, is try and figure out what we think the storyline should be in and around these dealer keys. And if the story stacks up, we deal it. If it doesn't stack up, it doesn't get traded. Now, this is the important thing, because this is only one piece of a jigsaw puzzle. It doesn't look at the rotations, it doesn't look at transports, it doesn't look at semiconductors, it doesn't look at any of these things. But what we would imagine, if you think about it very simply, what we would imagine is, if you wanted to shortcut it, and I'm never a fan of shortcuts, but if you do shortcut it, you'd imagine that the volatility traders have taken that into consideration before they price their volatility, wouldn't you? If you remember a conversation a long time ago with Mike about the most important line to have on your chart was the gamma line. And the reason for that is because the volatility dealers deal the order flow, but they also deal directionality. They've got to know if they're defending this price, and they'll be more inclined to defend the price if they believe that the underlying index is going to be bullish, of course. They'll be more inclined to sell this price here if they believe the underlying index is bearish, of course. And this sell comes in away from that price point like beauty. So we can understand that they're doing some of the heavy lifting for us. And what we can do is we can wait for them to make their decision and then play accordingly. You still make a lot of money by waiting. I mean, you're not gonna be crying over the fact you gave away, a few $100s here when you made an $8,000 buy side swing. You're not going to be crying over a couple of $100 here when you made another $2,000, $3,000 swing here. Crazy trades, crazy ideas, crazy outcomes, and it's all visible. It's all visible on your charts. It's all workable. What you've got to try and do is make sure you reference these prices, check out what the vols are doing, try and get some reads against the key levels and the timing, and then get your trades on. And if you've done it, you've made a fortune here, you've made a fortune here. Crazy good, easy to read, levels that you've already got well in advance, and simply just making good decisions. And it's about making good decisions today, isn't it? It's about making a good decision here, and it's about making a good decision up here. If you constantly make good decisions, you may not always win, but you'll have a far, far better career as a trader, that's for sure. Think about it. If you're going to use it, use it. If you're not going to use it, find something else to use, but make sure you know where your keys are. Very important for us as traders to know where our keys are located. I'm watching the S&P just now, and I don't have a fecking clue where we're going with this at the moment. Well, we're at zero. I mean, it's just not got anything at the moment for me.